The 122nd Amendment in the Constitution of India is the most progressive tax reform of India till date. It is called Goods and Services Tax, or short form GST. GST is expected to bring a tax buoyancy in India, and it is estimated that GST will push the gross domestic product, or GDP, of India by 1 and 1.5% upwards. GST is expected to streamline the spaghetti of tax structure in India, which is pulling the country's economy downward. European Union is other comparable unit which comes to mind, which has uniform taxation structure. With the introduction of GST, India will move up the ladder of World Bank benchmark of ease of doing business by several notches, and understandably, industry, trade, investors are upbeat and looking forward to once-in-a-lifetime opportunity in GST. The current government plans to introduce GST around second quarter of the coming financial year. Presently, the Constitution mandates the centre and the states to levy indirect taxes ranging from excise duty, customs, service tax, value-added tax or sales tax, entertainment tax, octroi, entry tax, purchase tax, luxury tax, and different other surcharges, as if all these taxes just mentioned are not enough to confuse businesses and consumers of India. Centre and states have their separate machineries to collect these taxes as well. But for the central excise and VAT, most of the taxes get collected on a base which itself has been subjected to taxation at some or the other stage of manufacturing value chain. Double taxation is a nightmare for manufacturers and increases the cost burden of products for consumers. The GST involves taxation at the destination level. This may mean gains for the consuming state and loss for the manufacturing state. That is why the state with a good manufacturing base like Tamil Nadu was opposed to the GST, and consuming states like Bihar, West Bengal, Odisha voted in favor of it. To bridge this anomaly, GST bill provisions compensation for the losses the manufacturing states may incur for the first 5 years of the coming into effect of GST. Analysts feel that in the short term, there could be some impact on price of services, which now attracts an average service tax of around 14% only at the central level. However, in the case of manufactured products like automobile, the standard GST could be much lower than the combined present effect of excise and state levies. On the whole, GST will be people friendly. It would also bring the unorganized sector of the economy within the mainstream. GST Council, comprising of Union Finance Minister as the chairman and finance ministers of the states, will together decide the GST rate. Any decision of GST Council would require 3/4 approval of the Council. The states would have 2/3 of the voting powers and the centre 1/3. For GST to come into effect, the Parliament of India will have to pass two enabling bills, the Central GST and the Integrated GST. Besides, the state legislatures will have to pass the enabling law of state GST. Also, the infrastructure for the central IT backbone needs to be in place before GST is rolled out in the coming financial year.